I'm very much looking forward to welcome new shareholders to the company, and I think there's decades of growth and opportunity ahead of ourselves. So I feel very excited about this today.
We introed you as a buy now, pay later firm, but increasingly when you've come on this program, we've talked about Klarna as an everything app. How does this IPO reposition you into that domain?
Well, look, I think that was actually my biggest happy moment from the IPO. There were two from the roadshow. One, I got very few questions about buy now, pay later, and a lot about our card and how it's growing. We've signed up 700,000 new Americans in the last 6 weeks to our card. We have 5 million people on the waiting list. But the best part of the roadshow, I tell you, was when we signed in to the reception at one of our investors. The guy in the reception said, "Oh, you're from Klarna." It's like, "Yes, do you use it?" "I love it. I use it all the time." And I was like, "Oh, but what could we do better?" He's like, "Nothing. Just get me the card." So that was the best moment from the whole roadshow.
Sebastian, it's like a marketing event when one goes public. You get your name in other people's mindset here in the United States. Will you go for a banking license? Talk us through where the growth story is going forward.
Sure. No, look, we have a bank license in Europe, as you're well aware of. We've had it for 10 years. It's fantastic. It gives us access to deposits. It's a very effective way of funding our balance sheet. It allows us actually to do it more cheaply than our competitors. But I think the key thing is, in the US, there's this group. McKinsey showed this in a study already 10 years ago. They're called self-aware avoiders. These are people who've tried the credit card. It actually makes slightly more than your low-income household or medium household income. They try the card, they try revolving. They say it's the product of the devil. They don't want to get in $4,000 of credit card debt with 20, 30% interest. They love buy now, pay later, and they love our card. They love the opportunity to put most things on debit and then occasionally put it on interest-free installments, very cost-effective. So that's the target audience, 20% of the American households. And now we have 26 million users in the US, so we're seeing a lot of pickup.
Seeing pickup, you're seeing pickup in your shares. You were significantly oversubscribed. As we told you, and you chose not to hear, that you're currently seeing shares being indicated much higher than even they priced at. Did you sell too low? I know you're a man that's had to stomach variations in your market capitalization in history. What does it mean to you to have a valuation out there in public more broadly every day?
Well, look, to be honest, personally, I'm not selling a single share in this IPO. I am, a long-term shareholder. I love this company. Been doing this for 2 decades. It's a long period of time, but fortunately I was 23 when we started, so I'm not that old yet. And I hope to continue for a few decades. And if you're truly going to disrupt retail banking and change this industry that has, amassed so much excess profit because of the lack of competition, the lack of customer focus, and you want to bring that back and you want to create a better service for customers, that's going to take some time though. This is not something you do overnight. And I just look forward to doing that. And then investors will occasionally lean more into the future and occasionally lean more into profit today and so forth, and that will vary, and it's up to everyone to take that decision for themselves.
Sebastian, the mechanism in this IPO is really important because you didn't raise a huge amount of money. And on this program recently, we've done all the reporting on some of your peers like Revolut, doing transactions to stay private deliberately. So you faced a choice and you chose to go public. What was the main motivation?
I think, again, to your point, we only raised $200 million, right, in this IPO, because the company is, self-sustainable from a capital perspective, doing really well, so there's no real need. I think that the key thing is we've had 20 years of private investors, employees who bought into the stock, and over time it became quite an effort to keep track of private transaction in Google Sheets, right? So now it's a little bit more efficient to trade the stock on the market, gives people who's been with us for many decades the ability to get some liquidity out, but most people are not selling much. And at the same point of time, fantastic to welcome new shareholders to the cap table who want to join what we're trying to revolutionize in retail banking. So I'm super excited about it.
Sebastian, would you kind of outline what the competitive landscape looks like to you, who your competitors are, and also the regulatory headwinds that you're bracing for?
Sure. I mean, people will always mention Affirm, Revolut, and we are very impressed by those companies, very inspired by them. But the truth is, credit card industry is a $1.3 trillion revenue market. So I would say it's mostly the incumbents. the old banks that are, the opportunity and where the competition is and where we can grab tons of market share. And the problem for them is, if you have a credit card program that's running at 30% interest and you're revolving people at $4,000, and you look at Klarna's payment model where our average outstanding balance is $100 and 0% interest, you're not too keen, you don't want to jump into that, you don't want to lose all the profit you're making. But for us, there's just opportunity, there's the upside. Grab more market share, become larger, it works well for us, we make money out of that. So it's, that's what we see as the primary competition. On the regulatory side, look, I think at the core of it, if 10 years from now, less people use credit cards and more people use debit cards and occasionally buy now, pay later, that's a better society. And as we get the chance to sit down and take all the noise away from media and so forth and actually explain and show our losses are 30% lower than credit cards, our consumers are borrowing much less. I had this conversation, I had a conversation with a customer. She was like, yeah, my mom called me and she was like, are you using this dangerous thing called buy now, pay later with Klarna? And she told her mom, like, Mom, you have a credit card, right? Yeah. How much debt do you have? $4,000. What's your interest? 30%. She's like, Mom, I'm borrowing $100 at 0% interest. Who is financially responsible? And you get that message across, then you realize that regulators actually start embracing and seeing value in that we're bringing competition to a market that has extracted excess profit out of customers by tactics that are not in the customer's best interest.
And your tactic, in many ways, has been to embrace efficiency, adopting generative AI in the workforce in particular within the product. How much more can you focus in on margins? How much more are you going to have to keep hiring to scale and to sell?
Well, the truth is, right, we haven't hired people for 2 years. We've shrank the company from 7,400 to 3,000 people, which is fantastic. But I would say we probably over-index a little bit on efficiency. And now, the last 6-9 months, we've taken much more focus on how do we take all the learnings. We've used ourselves as employees, as guinea pigs for all this AI software, all these tools. We took out all the SaaS software, the Salesforce and all that. And now what we want to do, we want to bring that to our customers. We want to bring that to the merchants. We're very excited in the coming weeks and months to launch AI-powered customer retail banking apps that we believe are going to be tremendously more valuable and create more value, save time, save money for our customers and make them feel in control of their finances. So it's very exciting to use AI now to create the next generation of financial services.
So Sebastian, you're a public company now, so you will have quarterly earnings. But I want to end by asking what the metric is that you will gauge Klarna's success by. What is the kind of milestone that you are holding your company to from this point?
Well, it's very easy. You mentioned already Revolut in Affirm. Klarna's focus in the last few years has been, let's get as many users as possible. It's a little bit like Facebook, right? You want to get as many users as possible. We're now at 111 million. That means, Affirm, I think, is less than 30, Revolut, 50. We're 111 million users, but our revenue per customer is not like as much as there, and that is it. Revenue per customer is the one metric now, because we know that when we start launching things like the card, we see massive pickup from our audience. So now, obviously, we want to reach similar revenue per customer as we're seeing our main competitors, and that has the potential of bringing us from a revenue size company as well to a different level. So that is the key metric right now, revenue per customer.